think the biggest thing that's changed in the January to March numbers is that one, we're seeing occupancy has now held steady for its third straight month. Now, occupancy nationally is a little bit lower than what we've been used to seeing, 94.1, 94.2%. But I think the fact that occupancy has fully, or I shouldn't say fully, now that occupancy is held steady for 3 straight months at the seasonally weakest point of the year
Yeah.
for leasing activity, to me says that we're probably closer to the floor than we've been at any point in the past 18 months. Now, that doesn't necessarily mean that this is going to be a year of excellent rent growth by any means. I think a lot of groups are going to be pretty pleased if you're at 1 to 2% rent growth, just knowing how much supply is delivering. But the good news is that, again, I think occupancy appears to be stabilizing. That's a big narrative change from even the January numbers, where we just saw occupancy had held steady for 1 straight month. I think the biggest narrative change, though, and I'm going a little bit out on a limb here because I don't know that I have a strong opinion on this, but I think the biggest narrative change is that it seems like those interest rate cuts that were hoped upon
Hmm.
this year may not happen as quickly as some had hoped, nor to the degree that many had hoped. You start looking at some of the underlying economic data that, again, the Fed would be using to make these decisions, and the economy is running a little bit hotter than I think they would like to see, while also generating or leading to a rate cut. So I think the biggest shift thus far might just be that sentiment that improved last year by signaling rate hikes aren't going to happen. I think some of that sentiment may have cooled now on the flip side of that coin, because there is a growing sense that those cuts might not happen to the degree that was initially hoped.